them. They said macroeconomic uncertainties were affecting consumers, inflationary pressures affecting consumers. I don't know, we don't see that in other parts of the economy, but Roku certainly says that's an issue here. Welcome to the Drill Down Earnings. We've got the latest earnings results from Roku, the fourth quarter earnings. I'm Cory Johnson, Chief Market Strategist from the Futurum Group. We want to look at Roku. It's one business that's changing a lot while the stock is on the move. And of course, that's what we do here at the Drill Down. I was trying to figure out what's really going on. Wall Street only cares about the beat or the miss. And this was a beat on the numbers, maybe a miss on some of the internal numbers. What's it all mean with the stock selling off? Let's take a deeper look at the business, at the actual numbers. $985 million or $984 million in revenues, a little bit above what the analysts were looking for, about 2% better. And profits, the company's still losing money. But I think when you look a little bit deeper and you look at the revenues per customer, that number continues to head south. Fourth quarter should be good for selling consumer electronics, and while it was better than Roku, did better than their competitors, they didn't really do great by their own standards. The combination of all that really saw the stock selling off as well. But I think that revenue per customer number, that ARPU number, really means a lot here. It has been consistently going down with a singular exception in the last year and a half. So what does that all mean when we look really deeper into this business? Because platform revenues were up 13%, device revenues were up 15%, but the holiday season, just not too strong for them. They said macroeconomic uncertainties were affecting consumers, inflationary pressures affecting consumers. I don't know, we don't see that in other parts of the economy, but Roku certainly says that's an issue here. And when you look what happened to the stock, it sold off in after hours, notably. And indeed, giving up a lot of the big gains from the rest of the year. Now here's Roku's CFO Dan Jedda explaining why the ARPU number maybe isn't so important, because he actually suggests because they're growing internationally, it could reflect growth in the future. Here's Dan Jedda.
Just as it relates to the platform revenue and ARPU, we've talked that we stated our ARPU was down 4% due to the fact that international is growing so fast, and that is true. But in the U.S., we are actually seeing ARPU flat to up. We don't break it out, but we are seeing year-over-year growth rates in ARPU, and it's really mix. It's all mix that's causing that slight contraction in ARPU. So it just shows you, and we're at a different stage, obviously, in the monetization of our international accounts, but those will monetize over time. We're in that scale phase, that engagement phase, and in that monetization phase, depending on the international markets. But we feel very good about the growth rate of both the U.S. and international.
So they feel good. I'm happy for them. But right now, those ARPU numbers headed down, and that certainly isn't helping the stock in the short term. All right, what does it all mean? What's your big drill down earnings takeaway? And what's one number that tells us a whole lot about Roku? Might be surprised by this one. I have both those things right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
All right, here we go with a quick drill down earnings takeaway on the fourth quarter earnings from Roku. Really interesting quarter from this company. While the business is growing 13% year over year, $984 million in revenues, a little bit better than what the Wall Street analysts thought, but we don't care about Wall Street analysts. They get numbers wrong all the time. But this business is growing, but more slowly. But interestingly, losing money, except when it comes to free cash flow, and that leads us to the drill down bite, one number that tells us a whole lot. $175,900,000. That's the free cash flow from Roku for the last year, even though the business is losing money. It's a true fact. This quarter, big jump in accounts payable helped that number. But while net income is a negative number, free cash flow is a positive number. And that's positive for Roku. Thanks for listening to Drill Down Earnings. I'm Cory Johnson. Check us out on Instagram, TikTok, yes, on YouTube. The Drill Down Earnings, part of the 6-5 Media Group.